Hey traders, 𝐿𝐼𝐞𝐥𝐜𝐴 here. You're here for another episode of Common Sense Market Analysis. Today is Turnaround Tuesday, October 28th, 2025. You're looking at a daily chart of the SPY or Spiders, which is the proxy for the S&P 500. What do we have on the docket today? As always, we got a ton of stuff to talk about. We got important numbers to talk about. The numbers were working today. You'll see that momentarily. We managed to nail a number literally in the middle of the ocean, in the middle of nowhere, in uncharted territory, on the freaking dot. You'll definitely want to see that. We'll go over that momentarily, but we got a lot of other things to discuss right now. We got Kabuki Theater tomorrow, Fed meeting, we got big time earnings, we got some more Trump and China talk. What a shocker. But what's important to know is that we have a lot of these events in which the anticipation is very positive, leaning towards the bullish side. We got a 98% chance that the Fed is going to cut rates tomorrow by 25 bips. And that could be the reason we're already seeing higher prices. Had a gap and go day, another gap and go day, never looked back, and just continuing to make higher prices and new all-time highs in anticipation of the Fed cutting rates tomorrow. On top of that, we have big time earnings. We got Meta, Microsoft, Google, Chipotle. I don't know about Chipotle, that stuff is always messing with my stomach, but these are big time stocks. A lot of them at the vicinity, if not already at new all-time highs. So a lot of positive anticipation for these events coming up, which is most likely why we're seeing this continued movement of higher prices. This could be one of those buy the rumor, sell the news type of situation. We'll go over that more as we get later on into this week. But like I said yesterday, the bulls are in control right now. Just taking a look at today's activity, we're up 0.27%. And when we're in this type of market, this type of tape where we're just continuously making new all-time highs, the bulls are in control. This is the exact time where we start looking for a sign and or signal of a trend change. Because in reality, the market can keep on going higher until she doesn't want to anymore. Until we get one of those sign/signals of a trend change, in which we did today. This is a doji candle. One of the sign and signals of a trend change that we look for. The only problem with this is that we didn't have the accompanying volume to go along with it. We would have liked to see something along this type of volume with that doji candle, but unfortunately we did not. Now this might be something later on this week, this might not. Another thing that I wanted to mention is that we have a big time number coming up, possibly very soon. That's this big fat round number at 700. I'm not going to get it right on the dot, you get the idea. 700 is a big time, big fat round number. Okay, it's important, it's magnetic. 7 is an important number. We see it every single day in the market, in life. It's a biblical number. It's a milestone number for the S&P. So I'm not saying that we have to necessarily get to this number by the end of this week, next week. Obviously, nothing in the market is 100% certain. We all know that. But this is nothing more than a target towards the upside right now. And the market, generally speaking, and we could use the 80-20 rule with this, she likes to have a reaction at these big fat round numbers, especially one of this magnitude. So I believe that the market is kind of in this like showtime zone right now. We got some very positive events coming up, a lot of anticipation towards the bullish side of things. So we'll see if that holds true. Maybe the market can push up towards the vicinity of this 700 number. You got the Fed, earnings, Trump and China. Last time Trump tweeted about something, we had this woodshed day. So we'll certainly be on the lookout for that. But we're in showtime zone. We'll see if she can keep on pushing up, get to the 700. Or on the flip side, maybe this is a sign or signal of a trend change. Maybe this is a buy the rumor, sell the news. Maybe she wants to come back to a visit of the 20 period moving average in which we are now extended from. We were talking about yesterday on how this area is important. We have a little bit of a full stack situation. We got this gap right here. We have multiple gaps that need to be filled. Markets don't like to leave these gaps unfilled. You also have the 20 period moving average creeping up around that area. Also, you have this big time breakdown candle high that can be utilized as support on the way back down. And to top it all off, this is the most recent breakout area. And markets love to come back and retest the most recent breakout area. So this is a place/area that the market wants to come back and visit to. Not saying it has to be tomorrow, Thursday, this week, maybe not even next week, but sooner or later the market is going to want to complete these gaps down below and head down to this area, back towards home base. You can put that on a sticky note. I told you that the numbers were banging today. Real quick, take a look at this. We had the morning pivot, we'll get into that later, but I said that if we got above the pivot and started to close candles above, the next overhead resistance number is at 68820. How you doing? 68820 is on the board. As you can see right here, spiked it by a few cents and then ripped it right back down. This number was literally in uncharted territory in the middle of nowhere. If we go over to the extended hours, had nothing in relation to the pre-market activity. This had nothing to do with fib extensions or anything like that. This is just the result of my dad teaching me the numbers, the mathematical work that I put into these numbers each and every single day. I literally have it coursing through my blood, and I like to say that I know my numbers. You'll see more of that in a second. But seriously, who else has numbers like this? I'd love to know. If we scroll up, we can see at 917, the first overhead resistance zone comes in at that number, 68820. This is trader's choice. Remember that it's a bit more on the riskier side trying to short at new all-time highs, but I did mention that this is an area where the market shouldn't just waltz right through. At 917. If we scroll up a bit, we can see at 939, came right in front of the pivot number, came up short, said that we weren't willing to trade the pivot number as we can easily go ahead and fill that gap. I was interested a little bit lower. Unfortunately, we did not get there. That's okay. We had other opportunities on the board. Let's just go ahead and take a quick look. So we got the morning pivot on the board at 686. We said that we did come up a little bit short of the pivot, so we weren't looking to necessarily trade this, as she easily could have went and filled this gap down below, which is exactly what she did. Put a line at the gap, spiked it by just a touch, and then ripped it right back up. Where to? That morning pivot. You can see that we were pretty much playing ping pong with that pivot number the majority of the morning. That pivot number was certainly important. Came back down for another retest, and then that's when we came right back up to this overhead resistance number, went right back down to the pivot, didn't quite get there, but what's important is we started to close candles above the pivot, which was the bull case scenario. So we didn't necessarily have a standout trade in the S&P besides that overhead resistance number, a place where the market shouldn't just waltz right through, but we had a ton of stocks on the move. We had 6 in total. 2 of them hit their entry targets. That was GLW and EDU. WM was actually a jump target. Even though it says, yes, this is an error, I'm working on it. I've been doing a ton of work all around the board with Inside the Numbers, Lazy Swing Trader. I'm going to be coming out with some pretty interesting stuff for you guys very, very soon. Okay, I've been working on this stuff for a while now. Stay tuned. But we had 2 stocks on the move. We had GLW and EDU. Let's go ahead and put some of these numbers up on the board. How do you like dem apples? That's stocks on the move for you. We had entry number 1 and 2, spiked through entry number 1, almost made it to entry number 2, and she gave you a rip-roaring rocket ride in the other direction. Made a morning high of around 87 from an entry at 83.76. We had a handful of traders trading GLW in the live room today, making some big bucks. How about a nice trade in EDU? New Oriental Education and Technology Group Incorporated sponsored ADR. How you doing? Look at this. Spiked through entry number 1, spiked through entry number 2, nailed the stop loss. And I can't stress this enough. Just because we hit the stop loss doesn't mean you stop out. Okay, we operate on an hourly close basis for the stop. So if we start closing candles below that stop number at 55.14 on an hourly close basis, then yes, that's when we know that the trade is starting to go bad as we're closing candles below. But the stop loss pretty much acts as a third entry. It's a third number that can provide a bounce, in which you just saw right now. Spiked it by just a little and then ripped it right back up. Made a morning high of around 59 bucks. If you averaged in at entry number 1, 2, maybe even the stop loss, then you came out with a pretty hefty profit in your pocket. We'll give that one the numbers work and how do you like dem apples? Stocks on the move has absolutely been on fire. That's one of the things that you get with stocks on the move. The other thing that you get is this Inside the Numbers commentary. And I urge you to pause the video and read the notes and go back to the chart to double check the work. Everything's in here for you. The morning game plan, the intraday updates, you got the afternoon write-up. And then not to mention, we have a list of 13 different markets with support and resistance numbers. We completely eliminate the guesswork for you because we provide you numbers that work, in which you just saw. Another example is Tesla, one of the 13 markets that we offer with support and resistance numbers. Take a look at some of the support and resistance numbers that we had in Tesla. We had support number 1 at 452.35, pretty much nailing low of day. How about overhead resistance number 1 at 459.45? spiked it by a little, and then did provide you a little reaction. How about overhead resistance number 2 at 46610? That was overhead resistance, never closed one candle above that number, and then where did she trade right down to? None other than the overhead resistance number 1 at 459.45. How do you like dem numbers in Tesla? What's going on in my number 1 favorite market leading indicator, Camp IWM? She's down 0.54%. So the spiders keep grinding up higher, making new all-time highs, and my favorite market leading indicator is down. I'm going to put those two numbers back on the board. These are numbers we've been talking about for Camp IWM for quite some time now. As we can see, we got the 20 period moving average home base pretty much right in between those two numbers acting as the midpoint. We have this unfilled gap right here, right below one of the first numbers. That comes in at 246.39. So it's definitely some unfinished business towards the downside. So we're still in a bullish situation for Camp IWM. We're above all the moving averages, so the trend is your friend. But she initially had a tough time getting going, making new all-time highs. Pretty much stalled out right at the previous all-time high, around the vicinity of it. So we'll see if these earnings and the Fed meeting tomorrow can jolt this thing back up, possibly even making new all-time highs. We'll have numbers ready for Camp IWM for Inside the Number and live room members. One important destination that I'll give you guys right now, so get your sticky notes out, is a big fat round number at 255. That's a big fat semi-round number, and that'll definitely be an important place for the market if we get there. We had a beautiful trade in IWM yesterday, and we had the same thing again today. We had some traders in the live room take a little base hit off of support number 1, which was at 248.80, spiked it by a touch, but did provide you the bare minimum base hit. And we don't let the rest go bad on us, okay? Because it came right back down. Then at that point, you're in the hole, so we never let the remaining portion go bad on us. And then IWM eventually got to the first overhead resistance number at 249.90. Was playing around that number for a little bit, spiked it by a touch towards the upside, but this was overhead resistance. Came back up again, went to 250.65. This was overhead resistance number 2, spiked it by a bit, but nevertheless was overhead resistance. Went right back down, where to? That 249.90 number. Went back up, used it as overhead resistance again, went back down. You can see firsthand that that number was important as we were eating some time off the clock at that number. And then also the bottom number is important because that's where we finish the day. The close is the most important thing that we can gather from the day, and we pretty much closed right on the 248.80 number. How you doing in Camp IWM? I guess we could call this a little bonanza day again. What do we got going on at the transportation department? My number 2 favorite market leading indicator. We're now closing below the pivot, below 3 out of the 4 moving averages. Yesterday, we went to retest the 100, 20, and 50 period moving average, closing slightly below the 50 period moving average, which is this blue line right here. And now today, with the snap of the fingers, we're now below 3 out of the 4, and to top it off, closing candles below the pivot number. So we are seeing some relative weakness in the transportation department. And this is a stealth market for those who don't know. Okay, not a lot of people know about the transportation department. It's my number 2 favorite market leading indicator, but a number 1 canary in the coal mine. We might have something brewing in DJT. Some important levels that you need to know towards the downside. You have this gap right here that comes in at around 15.454. And then also you got the last line of defense, the 200 period moving average, this black line right here. We did come up short the first time, so we'll see if this is one of the destinations that DJT wants to visit, but maybe on the second time around, we spike through it and possibly go back to retest these lows right here. And if we do and start closing candles below, that will open the door for another leg lower. So the more time we spend below this pivot number in green, the more likely she's going to want to go ahead and fill this gap, another test of the 200 period moving average, and even get down to these lows. We'll keep an eye out for the transportation department. What's going on in gold? Well, we said yesterday that we had a little bit of a bearish flaggish pattern forming, building energy for another move lower. First of all, the other day when I did my silver and gold analysis, that's this video right here, I said that this area right here at this breakup candle low was going to be some initial support. It coincided right with the 20 period moving average. It was a little above it. It's also near a big fat round number at 4,000. Okay, we didn't quite hit the number right on the dot, but remember, it's around the vicinity, 20% or so of the breakup candle low. So that was going to be some initial support for GC. Now let's take a look at where it landed today. here's another breakup candle low. Let's get the exact low that comes in at 39.09. Funny how that works, and that just so happened to be the low of today. So you got a breakup candle low, an interesting number pretty much right around a big fat round number at 3,900. Okay, if you know, we've been talking about these 369 numbers. They're certainly important in the market, and it kind of showed you that in gold today. And also, it was around the midpoint between the 20 period and the 50 period moving average. We had some numbers today in gold futures. Take a look at support number 1 at 39.34 and overhead resistance number 1 at 39.85. Pretty much caught the low of day and high of day. How you doing? I think I know my numbers. We'll have more numbers ready for gold futures and silver tomorrow. Last but not least, we got SMH shaking my head, the semiconductors, smash mouth. We're up 0.88%, and I'm just throwing this out there. You could call me crazy if you want, but I've been seeing some very strange numbers, particularly in SMH. Today we're up 0.88%. Yesterday we were up $8.80 with a volume profile of 6.66 and a high of 360.60. Those 369 numbers, you got some 8 numbers in there. You got a lot of palindromic numbers. A palindromic number is simply a number that reads the same forwards and backwards. So for example, 44, 88. Here's another one right here, up $8.28. Interesting on how that's the same exact volume as well. $14.41. These are all palindromic numbers. It's nothing really that important to the market. It's not something that we can necessarily use to help us in a trade. It's just something that I like looking at just because I like numbers. I work with numbers every single day. I see numbers every single day. It's something that my dad kind of drilled into my head. So I just find these things a little bit interesting and wanted to share it with you. Nothing more, nothing less. Call me crazy if you want. I don't care. So we're up 0.88%, continuing to make new all-time highs, and I really wish there was more to talk about in SMH. Some things that we can maybe discuss is that we came up a little bit short of a big fat semi-round number at around 365. As you can see, came very, very close. We do have the creation of no man's land right here at 356.21, which is generally a bull-bear battle. And then down below, you got some gaps that need to be filled in the future. You got this gap right here at 351.14, another gap right here coinciding with the 20 period moving average in which we are extended from. Also, you got this breakdown candle high that can be utilized as support on the way back down, just like we talked about in the spiders. And then just going back to this gap right here at 351.14, that happens to coincide right with a breakout area. So that's pretty much all I have for you guys today. Thank you all so much for tuning in for another episode of Common Sense Market Analysis. I'm 𝐿𝑰𝐴. Please don't forget to like, comment, subscribe, all that good stuff, as it helps me and the channel out a lot. We'll be back ready to go for FOMC day tomorrow, Kabuki day. We'll be ready in uniform for tomorrow's morning session, and I'll see you guys in the video later that night. Have a great rest of your day, and take care now, folks.